Hi, folks, and welcome to Money Ed Financial Academy. I'm your instructor, Jerry Penner. Today we're going to talk about credit scores. In school, your grades were important. In life, it's your credit score. If you want to finance a new car, or get a mortgage for a house, or rent an apartment, the folks loaning you the money for these things are first going to check your credit score to see if you are a good risk or not. The better your score, the more likely you are to get the loan you want at a rate you like. Your score can mean the difference between getting a great mortgage, getting a manageable mortgage, renting an apartment, or living in your car. According to TransUnion, the average credit score in Canada is 650. The minimum required to get a mortgage is 640. Any of these three companies can provide you with your credit score. As a matter of fact, it's not a bad idea to check your credit score with each of them. Equifax, TransUnion, and Experian don't share data with each other, and not every credit agency reports their data to all three companies. You may find something wrong on one company's data that doesn't exist in the other two. If you visit their websites, you can find out how to mail a request and get a free copy of your credit report. It may take a month to get a reply mailed back to you, and it may be confusing. If you pay in the website, it'll cost about $30 and you'll have results immediately. And there will be cool graphs and charts and great explanations on what all those numbers mean. So what drives down your credit score? Stuff like this. Never, ever miss a payment for any bill. If you have multiple cards, that's an indication that your revolving credit may be out of control. Cancel the newer ones. The older ones have a history. Again, revolving credit utilization that's over 30%. Pay off your cards every month. If you're shopping for a loan at multiple banks, each bank will request your credit score from Equifax, Experian, or TransUnion. This has two different effects. First, each query shows up in your credit history so that other banks can see that you are rate shopping. Second, each query from a bank drops your score a few points. When a bank makes a credit query, this is known as a hard pull. It negatively affects your credit score. When you make a credit query, it's known as a soft pull. This doesn't show on your credit history and doesn't have a negative effect. Did you know that when you and your spouse or any other person sign a loan agreement like a mortgage or create a joint bank account, you are joining your credit scores? If one of you has great money habits and the other has crappy ones, the crappy habits will be reflected in both of your credit scores. Overdrafts, collections, charge-offs, judgments, and bankruptcies can lower your score. These remain on your credit report for 6 to 14 years, depending on the province. Bankruptcy shows for 14 years from the discharge date. Improving your credit score isn't hard. Pay your bills on time, in full, each month. If you can't do this, you need to go back to your budget calculator and figure out why. Check your credit history regularly. If someone steals your identity, unusual activity like new credit cards or loans that you're not aware of will show up. If you do miss a payment, it'll show up in your credit history and damage your score. These things will fall off your record in about 7 years. But you can remove them faster if you contact the creditor and agree that the item will be removed when you make good on the debt. It can take a month or so for the change to show up. So, you have some homework. Find out your credit score and your credit history. Some banks will offer you a free look at your credit score. Scotiabank offers this free service based on TransUnion data. What's your credit score? Leave it in the comments.